Excellent. Well, thank you all very much. We do indeed have a fantastic panel lined up for you here, and so I just want to just jump right into it. I think that this is where the rubber hits the road, and I'm looking to make this as practical and real as possible. So, EJ, you want to just lead us off, do your little intro?
Sure. Hello, everybody. EJ Ackner, Head of Digital Banking and Strategic Change, HSBC's commercial bank. That means I cover digital platforms, process engineering, and applied robotics. Basically, our digital partnership areas, as well as all of our project engineering efforts for business clients from 5 million to 5 billion in revenue.
Great. Let's just work our way down.
Hi, good morning. My name is Bhargavan. I go by VB. I'm OnDot CEO. OnDot Systems delivers card products that enable financial institutions to deliver premium consumer experiences, and we have just over 4,000 financial institutions who use our technology today.
Hi, I'm Peggy Mango. I am a leader in the innovation group at Wells Fargo. I lead our Greenhouse initiative, which is a new mobile bank. And I also work with our organization on some of our enterprise initiatives surrounding innovation and Fintech partnerships.
I'm Dave Mooney. I'm CEO of Alliant Credit Union. We're based in Chicago, but with a national footprint. We are really more of a direct bank than a traditional branch-based institution with really a single branch in Chicago and, again, membership nationwide.
Hi, I'm Jeff Winter, and I lead the technology team at Marcus that built the Apple Card.
Great. Well, I think that's a good opportunity for us to just jump right into it. Peggy, I want to go to you first. You get the opportunity. You know, there's a lot of talk about fintech. There's a lot of talk about innovation, but I think that you and your team are really doing it. What does that look like, and how are you making it happen?
Sure. So as my panelists would agree, this is all starting with the customer, right? So whether it's a consumer or a small business, customer expectations are really driving the innovation work that we're doing and that others on this panel are doing. And so the customer expectations have changed. They're driven by the big tech, the apps that people use every day, right? And then you have the fintech players that have really refined and perfected certain use cases or experiences. So you have this consumer or small business, and they're saying, wow, I can get this service through here, or this, I have this experience in my, on Google or my messaging or my entertainment app. They expect the same with their banking and their financial services. So the work that we're doing is really trying to meet and exceed some of those consumer expectations.
Great. Now, EJ, how about for you? Are there some things that come top of mind about how you really capture the opportunity with fintech?
There is, thank you. So everything that Peggy said, absolutely customer first. For us, it's a little bit more expansive because of the international dynamics of HSBC. So for example, how we make certain customer journeys very easy, whether it's client onboarding, but not just contemplating that within a single market, the United States, but if a business or a corporate client wants to onboard in 10 countries at the same time with end-to-end digital product delivery, that's a little bit of a different type of execution. So that's on one side. On the other side, certainly in different markets around the world, HSBC has a different presence. In the United States, it's very much about how we can scale our growth very quickly, and we're doing things not only internally, but recently announced partnerships with actually a local fintech known as Neptune Financial, or Nepfin. That's allowing us to bring our products and services deep into the market all across the United States, all at once, really for access to those places where we wouldn't ordinarily have a branch. So it's that combination of really activating all of the international corridors for our business and our commercial clients, but in certain cases, very purposely partnering with fintech to get out there and drive those relationships through new types of scale and access to other markets too.
Great. Now, Jeff, before we came up on stage, you were talking about not only sort of capturing the opportunity, but doing it pretty quickly. Can you give just an overview of just what some of those challenges were? Like, what is it that you did?
So I came to Marcus about 1.5 years ago when we first had the deal with Apple to launch the card, and we decided to build from scratch a new credit card platform in the cloud. And our assessment was that would enable us to meet the needs for the card, which is fairly innovative from the Apple side, also enable for us to build more quickly. And so in that respects to that, we've done a lot of research working with both fintech and regular tech companies. We always start by assessing from the beginning, like, does Goldman Sachs have any sort of unique strength that we bring to this? If the answer to that is no, then we start looking for someone else to do it. Then the second thing we would look at is, are there players in the market who have the scale and availability and engineering expertise in order to deliver what we need at scale? If there's none of those, then we may revisit and implement ourselves. And the third one we would look at is someone done something unique. And for example, at Marcus, we purchased Clarity Money, and we also purchased Final because we thought they had unique offerings in the marketplace, even though they might not be at the scale or the other things that we would normally measure a vendor on.
Now, VB, I know that your business has been working with cards for a long time. I'm wondering what's your take on sort of where the technology is going, and how does that fit into banks' opportunity to capture fintech?
Yeah. I think as you look at the constraints of financial institutions and card issuers across the spectrum, from really large global banks to community banks and credit unions, I think the constraints are different, but to some extent the fundamental challenge is the same. So mindshare drives wallet share. So how do you capture mindshare? And when change happens, as Peggy just said, right, it's happening not just in the financial industry but across the board. At some point, it's not a trickle; it becomes an avalanche. And the question is, how do you deal with that, right? So, in today's world, it won't be hyperbole to say maybe the definition of bank itself is changing. Mm-hmm. Some millennials are as likely to open an account with an Amazon or get a card from Apple, and payment is getting embedded. Right? And world over, neobanks and digital banks are transforming or reimagining what it means to engage with the consumer. So the real question is, how do you drive customer experience? And in broad brushstrokes, you talked about technology. I'm hoping we'll get to that in a little bit more. But first, just in terms of the mind share, I'd say it's all about context. Right? So engaging with consumers when and where it matters, giving them the information, but also the choice in a contextual manner.
Great. Now, not only are banks changing, but credit unions are changing quite a bit. Dave, I don't imagine that you have the same budget levels as Goldman Sachs, Wells Fargo, HSBC. So how do you bring about that change without having the ample budgets that go with it?
Yeah. We have to pick our spots, is one thing. We have to be very disciplined in regards to what we do and what we choose not to do. It's one of the reasons why we doubled down on remote and self-service access and became essentially branchless, was to not focus just financial resources on remote and self-service access and digitizing our company, but also, perhaps more importantly and more scarce, is management attention as a dear resource. And then in terms of fintech partnerships, it's really, there's any number of them that kind of come across the transom, but being very thoughtful and intentional about what the objectives are. And I would encourage anybody to really sweat that. And it's easy to become infatuated, but the risk is that they become something that somebody described as petting zoos or innovation theater. So is it for direct financial gain, and is that related to growth or cost? Is it for improving CX? Is it for learning? And if it's learning, what specific learning objectives do you have? And you can't, obviously, in these partnerships, predict all the outcomes, but you should still be very thoughtful and disciplined and remain focused on the intent.
Now, Peggy, I saw you nodding your head there, agreeing that there's a need for focus. Do you also share that same need for focus? And what does that mean within a large institution like Wells Fargo?
I was nodding, I was about to say innovation theater, because that resonates. People do fall in love with a certain experience that a fintech has created, and they want to partner. And having that rigor, we share that as well. What is the learning objective, if it is a learning objective, which is very important. It's very important to be exposed to these partners, understand how they think, understand how they've gotten the traction or the user experience right. But the end game may just be a proof of concept, and then we move on, right? And so creating these type of checkpoints and milestones for how and when we move forward is extremely important for an organization of every size, I would say.
So if you have a proof of concept and then you move on, is that a failure?
No, absolutely not. Absolutely not. And that's part of the cultural shift that, that large companies maybe need to embrace a little bit more.
EJ, any thoughts on that? Proof of concept, piloting, is that a role in your innovation strategy?
It is, and in certain cases, you move forward very quickly because, to the points made, you have a prescribed goal, and it's clear. I want to perhaps be a little bit of a contrarian on this, though, because...
Oh, please do.
In the...
Is this with Peggy or Dave or
no,
both together?
Thematically.
Okay, good.
Thematically. In doing partnerships, especially doing partnerships well, is really hard. And I think oftentimes this narrative, especially over the last few years of speed, POCs, pilots, there's value in that, but at the same time, you have to make sure that your partner is there and going to be there on a sustainable basis. Time is too short, money is too tight, and so you've got to pick these partnerships very carefully. And it's not just, you know, making sure you kind of get them through all your internal operational stakeholders. There's the very real reality that you better let your regulators know up front, you know, what you're doing. Make sure contextual expectations are set. Make sure that if you do have a longer term view, and this is just, you know, the practical reality of budget planning in any firm, large or small, that you've got a sustainable path forward with that third party so you can continue to build on the value of the roadmap, and keep going iteratively. And ultimately, all the while, make sure that you're checking in ultimately with the customer to make sure that that need is being satisfied. And I think the big part and the big hurdle up front is this new world of a shared client, a shared customer. And I think we're finally comfortable with the place where in some of the partnerships we have, the notion of having a shared customer is something that has to be done up front. Like, what are the contours of that shared client? Because many of the digital experiences that we are trying to create are not just HSBC and Partner X, they're co-created journeys. And now when you're in the world of co-created journeys, it's a very, very different world, whether you're talking about API integration, whether you're talking about joint onboarding from third-party ecosystems or platforms. These are very different types of conversations as opposed to, you know, you've got a great solution, let me plug it somewhere into my stack, and then we'll kind of see how it goes. We're in very much a new realm, though, of these very public co-created journeys, and you just can't flip the switch off if things aren't going well. You've got to make sure that you've got runway. And that doesn't mean you don't do the partnerships, but you've got to be very planful around how you do them.
Yeah, now VB, you're on the other side of that, right? So do you feel like there is
Literally.
is there this new energy towards co-creation and collaboration? Or is there still just a lot of tire kicking and people just kind of honestly wasting a lot of your time?
Yeah, so I loved what he said. I respectfully hated what she said. Because, you know, it takes a lot of effort and, you know, opportunity cost. And so if someone's creating a proof of concept, you know, for Peggy, it's, hey, 1 on 110. For me, it's my life. So it does matter. So to the extent that, but on the other hand, that's the reality of where we are, because you don't know ahead of time what works and what doesn't. So I think that's just one of those things that you know, comes with the terrain, I suppose. But I would say, broadly speaking, in terms of what may succeed, few things are pretty much, you know, table stakes, right? So we know that everybody's got a powerful tool, interactive tool in their hands, and as EJ said, I think the world is going API in terms of systems of record. So the question is, how do you co-create or create experiences that bridge the APIs with the digital channel? And if you're mindful enough about it and say you want to anticipate and guide consumers, 3 major points I would say. One, you want to anticipate and guide consumers. Second, I think you want to have meaningful conversations, not just do alerts, but actual conversation engines. And third, in today's day and age, you want to create solutions where new experiences can be created very quickly on the cloud. So to the extent that for large institutions, they have internal development. For smaller institutions that have more constraints in terms of outsourced processing and digital channels, to work with partners who can deliver these sorts of technologies, AI, interactive messaging, cloud-based workflow systems, I think it's possible to be very thoughtful about it early on rather than just shoot and hope it hits the mark.
Yeah, so Jeff, you've talked early in your introduction about cloud being a key piece of the puzzle for the work that you've done at Goldman Sachs. How did you arrive at the decision to go cloud, and what has that meant to your development?
So, I came to Goldman Sachs from the Valley. I was previously at Stripe and Twitter and a startup of my own called CardSpring. And so I was very familiar with the cloud. It is a strategic decision by Goldman Sachs that the cloud, in the long term, will be the right place for them. I think they've been pretty public about that. We were building something brand new with no legacy and no legacy business. There's no legacy card business at Goldman Sachs. And so it was a perfect opportunity. It also provided for the flexibility that you get from moving to the cloud to scale in a way that we could scale to meet whatever the demands would happen to be as we roll out these programs. And then the last one was that it provided us an opportunity for an ecosystem of products which are software as a service or managed solutions. And one of the things that we very intentionally did around that was we didn't go to the cloud and say, hey, I'm going to take all this licensed software and run it in the cloud like we did inside the proprietary hosting. And then number two is when we looked at a service provider, we have many, many service providers for our card program. We tried to use it off the shelf. And the instinct at Goldman, and I think many banks, is to say, oh yeah, can you customize the heck out of that until it no longer resembles your real product and then fail to support it for me? And so we've done a very, very strict bar to say, we're going to use it off the shelf, and it is extremely difficult to get a custom request even to the vendor. Like we can ask them, is this on your roadmap? But we have, with only one or two of the vendors have we asked for any customization, and we think that that puts us in a place where we're going to live in the ecosystem of products as they're offered, rather than living in an ecosystem of projects that people may or may not maintain for us.
Excellent. Well, I'm certainly having all the fun up here getting to have this conversation with this amazing group, but I do want to share some of the fun. So we have been using Slido to be able to submit questions. I think it's Slido and then /Finovate. So if you do want to be able to join the conversation, join the fun, log in and please share a question or two. I'm happy to introduce that into the conversation. And I see, is there a, oh, okay, good. I was going to say, I see one over there, but I think it's over here too. So the panel, here's the question. So with all the new digital collaborations across all types of companies, do banks / credit unions become more or less important? Dave, I'm going to start with you on that. You got a take on that?
I think in some respects it depends. It depends on.
Oh, Dave, it can't just depend. You got to give.
I know. I'll elaborate. So I think there are opportunities to become more important through collaboration and partnership to bring more value to consumer, to improve the consumer's experience. I think there's also a danger, and less involving collaboration. Collaboration may be the solution to it. I think there's a danger of traditional financial institutions becoming less important, less relevant as new value layers insert themselves between the consumer and the financial institution. I think about companies like PayPal, who essentially are riding the rails that we built and paid for, but often providing better experience at a better price, and intruding between the financial institution, who still, in almost every case, maintains the financial account. But typically the closer you are to the end of the value chain, the more the value you capture. And what I think the risk there in terms of these value layers is that we become a utility, we become the vault, essentially, and there's not a hell of a lot of value in that. So I think the collaborations are actually a way to improve value, improve utility, and if approached in the right ways, knowing that sometimes fintechs bring what we covet as a financial institution, and the financial institution brings what they covet, which is an established customer base, stable low-cost funding, compliance maturity, and other things.
All right, so next question. Peggy, I'd like to send this your direction. So how do you get from POC to pilot to production faster? What are the techniques and any secrets from Wells Fargo about it? Maybe not even secrets. How do you get there? I didn't say it was going to be easy.
It's not. It's definitely not easy, and it's definitely not easy right now. I'll acknowledge that. So the most important thing here in getting to production, and we interact with lots of third parties surrounding identity and fraud. And so to get there faster, you need to get ahead of our internal processes faster. You need to understand what you need to do from a third-party security risk perspective. All of that has to start almost immediately. So you're doing that almost in parallel to the POC, which could be a lot of work. I acknowledge that, right? And I was a former startup founder, and same issue. I try to counsel the bank, we can't waste these people's time unless we're super serious. But to answer the question, to get there faster, you would have to start all the third-party risk assessment work in parallel to the POC.
Okay. EJ, maybe you can help us with this. So what type of fintech partnerships are most important in the landscape for the next 3 to 5 years? What technologies are you looking to? And by the way, can you answer in 30 seconds or less?
Security always top of mind, full stop, always interested in learning from the best and brightest in that space. Number 2, for us, anything that helps our clients move in a frictionless manner across international borders. Number 3, this whole emerging space of what's known as BaaS or CaaS, banking as a service or compliance as a service, where we're finding that there's great value in dialogue is, I'm not sure how my company would feel about this, but as we decouple parts of the institution to kind of play different roles in different places at different times, there's great value in providing, a KYC piece here, a deposit piece here, a payment rail here. So it's this idea that you don't have to bring the full power of HSBC to any relationship at any given time, but you figure out what's contextually relevant in certain places at different time, and then you build it, from that point forward. So our ability to kind of be very nimble with different components of what we do very well, I think is where we're interested in partnering. That was 35 seconds.
Excellent, excellent job. All right, so VB, you've got a very successful, mature company. You've been a pioneer in lots of different ways. If you were to give some advice, if you're the question here, so what can fintechs do to be better prepared to partner with banks? And sort of the flip side, what's the biggest pitfall, not that you've seen, but what's the biggest pitfall you've experienced, as you've gone through these relationships and their negotiations?
Yeah. So actually, in some sense, I completely agree with what Peggy said, which is something we've learned over time. Technology is, in the grand scheme of things, easy. Mm-hmm. So defining the value, I think we all go with the premise, and it either proves out or not. But in terms of execution, I think there are 3 key things that we learned. First, bolt on to legacy infrastructure is really hard. Mm-hmm. And it's very easy for fintechs to underestimate that. So it took us over 6 years to establish and get ourselves into the real-time authorization rails of 9 of the 10 major card processors in the US. It's not an easy task, right? Easy enough to say, hey, we are in the ISO 853 stream, we see everything. Well, not quite that simple. So that's one, really bolting onto legacy infrastructure. The second one, which really resonated, is understanding the BAU processes, because it is less about what a disruptive technology can bring. It is just as much about what sort of things need to change in the BAU processes of the bank. It took us a long time to even appreciate that this is perhaps a tier 1 problem, not trying to figure out the bolt-on of technology. And the third key thing is, as a technology vendor, I might be looking at mobile as the, channel of the future, but a financial institution has to support myriad interfaces, whether it's mobile or online or CSR, IVR, etc. So making sure that there is that cohesive view across all channels, I think, is critical.
Excellent. Well, I think that I've been surprised that there has not been as much conversation, again, about sort of the regulatory framework and the environment around compliance. But I think this is sort of on the money here. And Dave, I'll send this your way. Will the regulators catch up?
I doubt it. I think regulators are usually fighting the last war, and so almost, genetically, unable to get out ahead and probably not catch up either or stay up.
Well, Peggy, top of the list is for you. So this kind of gets into your personal experience. What have you been able to bring to your role at Wells Fargo that was sort of shaped from your own startup experience?
Great. So Jeff and I talked a little bit about this behind stage. We've talked a lot about the technology that we would get from these partnerships, but what I learned the most is it's all about distribution. It's all about distribution. So kind of helping my organization understand that the new ways to market, to grow, to be where your consumers are, all these new digital marketing, digital referral, viral, all those growth all those growth practices that these tech startups, you can learn more from these fintech startups about distribution and growth than necessarily technology. And so that I've been trying to be an evangelist in that area.
Yeah, I'm so glad that you bring that up because I think that within Silicon Valley, I think about there being a Silicon Valley playbook, right? There's a way that startup companies learn. When we talk about moving fast and breaking things, a key part of that are, hacking growth, right? They know how to build very quickly, and it's an entire mindset that has not sort of made its way yet into large companies. Jeff, have you seen that? Is that an experience from your startup days?
Definitely in my startup days and my time at Twitter, we had a ton of mechanisms that we could use for growth. And when I first arrived at Goldman, of course, we were just beginning to build the card so I could poke my nose in everyone else's business. And I was very surprised at the sort of 1980s style of marketing and customer acquisition that happened generally, even at Marcus, which is a pretty technology-forward bank. And one of the things is that we've been learning through this partnership is one, exposure to those skills. And then the other thing is, of course, given who the partner is in Apple, doubling down on this idea that the experience of the customer in using your product is paramount. And that's been a great lesson at Goldman that we've really taken to heart.
So Jeff, I have to follow up. So what is that 1980s style of marketing? I'm not sure
Direct
if I know.
mail.
Direct mail. In a word, that's what we're talking about. And what are some of these growth hacker strategies? So what is the Twitters and the and the OnDots and the Squares of the world?
So the most common one that is difficult, it seems to be difficult for banks to do, and I'm not a banker, I don't understand why this is hard, is to institute sort of comprehensive referral programs with rewards in them. The Valley, ever since the early days of Amazon, has shown that that's wildly successful, produces better customers with better returns and more trust. But it's really hard for banks to get their mind around doing that.
EJ, any ideas on why this is so hard for banks?
Just want to say one thing on this. Distribution's important. Distribution and making a profit is really important.
Even better.
So let's take a step back here and realize, yes, there are many, I think, great innovations that have come out of the Valley that have taught many industries, not just banking, a lesson or two on distribution. But at the end of the day, the bill's got to get paid. And so, you got to be able to distribute to a point and serve your client, but there has to be a measurable outcome at the end of that distribution point that serves the client and ultimately the shareholder. And it's that entirety of the circle that has to be complete. And candidly, I still don't think many companies who are very good at innovation have figured out how to complete that circle.
Yeah, very good point. So, the question about something that we've heard about over the course of these last couple of days from Finovate, conversational AI. VB, I'm going to ask your take on this. You're a technology visionary. You're in the Valley. This is probably, you probably hear this over breakfast. You hear this over lunch. You hear it over, it surrounds you. What's your take? Is this real? Do you see it coming to banking?
Yes and yes. So like I said, I think there are three key things to look at. So one is targeting experiences to consumer personas. So as an example, there are 4 broad consumer personas. So those that are savings first, those that are security first, those that really like engagement first, and those who like cool. So if somebody wants savings first, you want to get them an analyst. Somebody wants security first, you want to give them a guardian. Somebody wants engagement first, you want to give them a valet. Somebody loves school, give them a genie. So how do you figure this out, right? Having a contextual interaction by understanding what users' proclivities are and then driving that as a conversation as opposed to just shooting information or making it available, I think is absolutely critical. The question is how to engage in conversation without inundating somebody. And that's where I go back to the earlier point about context.
Peggy, how about for Wells Fargo? Are you looking at conversational AI, and how do you prepare, or how do you propel that forward?
Yes, so we are, and we're looking at it, obviously from a device off us perspective. How do we be where our customers are, and then we're also looking at it on property. We're doing a lot of, I would say, what the competition is at. So we're definitely investing in the space. We're investing hard in AI in many different areas.
Okay. There's I think a sort of a technology question about open source software versus closed source and everything in between. Jeff, let me just go to you on that. I think you probably had to work through this. Any insights there?
So we are very strong believers in using open source software and participating in the open source community. I think it's very hard to use open source software without participating in the community. But our software stack for the card has a huge amount of open source software. I will tell you that in general, we take a strong look at even basic technologies like things like databases and publish and subscribe systems, and we would vastly prefer to use a managed service provider than to manage and run that ourselves, subject to the fact that they have to meet our security and scalability and operability concerns. But we think that that's a place where it'd be very dangerous to get out over your skis to think that I can run MySQL better than the hosted version of MySQL is probably not true. And we spend a lot of time talking inside the bank about those sorts of basic technologies, and almost all of those actually do reflect hosted service versions of open source software.
And Dave, how about for you guys? So again, you don't have the budget, don't have the resources. Does that make open source more attractive?
Well, first of all, as the CEO, you realize you're asking the wrong person that question. So.
But you're probably writing the checks, or at least authorizing them.
but I would tend to agree that I think that's the direction we would want to go, and spend less of our time developing and maintaining stuff that's standardized and fairly universal. And again, thinking that we can do that better. Your comment about customizing just kind of, to me, made me cringe, because we've done far too much of that as well and paying the price. So yes, generally that's the direction we would like to go, and be able to focus our attention on development of functionality, improving experience, improving value, and not on maintaining things that other people can do better.
Great. Well, we're ticking down to our last couple of minutes here, and so the way I'd like to end is, you could all think about, let's target this towards the banks, the credit unions, the FIs in the audience. If you could share just one tip on how to capture this fintech opportunity, what's that one tip? Jeff, you want to start down there?
You have to remember I did engineering, but for me, if you have solid, scalable tech and mature SDLC, that knocks so many vendors out in the first round review for me, even people that I really like what they're going to do. And so I think if you could just make sure to cover your hygiene from the beginning on those areas, it would be worth it.
I guess just really more a note of caution is to recognize that in most cases, the situations and motivations of the fintech and the FI are very different. Fintech's trying to scale quickly, grow quickly, as you said, move fast and break things. In banking, if you move fast and break things, you break it, you bought it. And I mean bought the farm in many cases. So you want to recognize that. It's not a judgment, but you need to recognize that the interests aren't always aligned. And reconcile that.
Great.
So mine isn't so much of a tip, but I read a really good white paper the other day by QED investors, and you said to bring actionable things, and I thought I would share it here. It's called the Falling Barriers to Entry in Fintech, and it really just talks about how much capital it takes to start a fintech company today versus 10 years ago, and then what kind of impact that's going to have on the financial services industry. So I just wanted, and I have no connection, it helped me kind of shape some of my views on the future.
2 minutes? 2 seconds?
2 seconds.
Okay, maybe 5. I think purpose-built fintech solutions that are able to drive the economies of experience by having proved it, working on legacy infrastructure, understanding the constraints of BAU processes of banks can be very meaningful.
2 words, deliver globally.
Excellent. Well, I'm Steven Ramirez. Again, I'm with Beyond the Arc. You can continue the conversation with me on social media. I'm at Beyond the Arc. And in the meantime, let's thank this fantastic